Welcome back to another episode of Investing Explained. Here's today's question.
So I really like this question. And I think this is a question that most people out there, I would argue 90% of the general public at a minimum, would probably agree with your position and not understand how this has any intrinsic value. Because at the end of the day, it's just a bunch of ones and zeros that are distributed across all these different servers around the world. And so how does that have any type of value? And so this is how I would explain it to you and why I think that there is fundamental value here. So when you look at the way fiat currencies work today, what's the fundamental value of a fiat currency? Well, it's backed by the government. The government ensures the fact, like the FDIC here in the United States, if some emergency happens and your money's in the bank, they'll back up to, I think, what is it, $250,000 at this point. So what are they backing that up with? They're backing it up with more printing. So what they're really saying by having an FDIC insured is that if all the credit contracts, and I think we got to have a conversation about what money is whenever we get into this. So real quickly, money is really two things. You got a monetary baseline, which is an actual unit, which is just ones and zeros that the Fed keeps. Okay, they have a monetary baseline. From that monetary baseline, you also have credit that's created on top of that. It's a fractional reserve banking that's created on top of that. Most of the money, the dollars in the system, is credit. And so that's why we have these big credit cycles that expand and contract, because most of it's credit, and that credit can dry up and it can expand, and then it can dry up and it can expand. When you're talking about cryptocurrencies, it's just monetary baseline. There's no expanding and contracting of the credit with it. And what's that backed by? Well, it's backed by faith. People that believe that the protocol will not be updated and that there are incentives in place. It's the ultimate game theory that people say that will keep the protocol in check, because the people that will hold the majority of the coins aren't going to want them to be increased, or the monetary baseline to be increased. So if you buy into that, then there's an intrinsic value in the fact that the monetary baseline can't be manipulated. But history has proven that fiat currencies that are backed by nothing have always been manipulated by their monetary baseline and has been increased. We've seen that with the dollar. You can pull up any chart of the dollar for the last 100 years, and you can see that the dollar is devaluing, and devaluing at somewhat of a rapid pace. And so that's what it really comes down to, is do enough people globally have faith in a mathematical solution through blockchain technology on Bitcoin that the protocol will not be adjusted. Now, you got a lot of people forking the protocol and trying to mimic the protocol. But as long as you have a network effect and more people continue to join that network, the protocol will not adjust its monetary baseline. So you have to have faith. You have to believe in that being a better store of a unit of measure than governments doing that. My personal opinion is I kind of buy into it a little bit. Now, we're not talking price right now, because the price is going in wild swings because it's brand new. There's people that are adopting it. There's people that are trying to short sell it. There's all sorts of things that are happening. But if you asked me if I would be surprised in 10 years from now if Bitcoin was a global currency that a lot of people were using, that would not surprise me in the least bit. I would not be surprised at all if that was what happened in 10 years from now. So this is the quote that I'll take from Ray Dalio. And this isn't exactly word for word, but it goes something like this. Don't think about how you want the world to be. Try to understand what the world is and how it does function. And so whenever I think about how this might play out, whether you want Bitcoin to work or you don't want it to work, or you want fiat currencies to remain dominant, backed by a government, whatever, you have to take your opinions out of it, and you have to think, what is going to actually happen here? And for me right now, it kind of seems like this whole crypto movement is going to become real. And I think there's going to be a lot of bumps along the way. And I mean a lot of bumps, and big bumps going up and going down. But I wouldn't be the least bit surprised to see it really come to fruition based on the network effects that we're seeing on the protocol today.
You know, it's such an interesting argument that on one side you might say that it doesn't have any value because it's not backed by a government. And then the other side says it has value because it's not backed by a government, which is guess kind of ironic. And the more you think about it, and the more that you study economic history, there is a lot more to it. And let me just give you a few examples. So, in Russia, for instance, in 1992, so this was the first year after the economic reform, retail prices in Russia increased by 2,520%. So think about that. Think about that today, where we are looking back at 1980 in the States and saying, well, inflation was 13, 14%. Like, we don't want that to happen. And no, we don't want inflation like that to happen, but we definitely don't want Russia to repeat itself with 2,520% inflation in 1 year. And this is not just ancient history. If we look at what's happening in Venezuela right now, so just the first 9 months of 2017, they had more than 500% inflation. So basically what I'm trying to say here is that while we in developed countries are talking about, it's volatile, we believe in the established system, well, we probably have a good reason to do that. And it probably makes a lot of sense for people, call it the top 1 billion people in the world, not to buy Bitcoin. Because, like, why would you? You can, in 24 hours, you can have access to a bank account, you can get credit, you can trade international markets. It makes not a lot of sense. But if you're one of those 6 billion other people or whatnot, it probably makes sense. I think it's around 3 billion that are completely unbanked, and then there's another 3 billion that can get access to a bank account. It's just very, very difficult, and it doesn't have as much utility. Perhaps for them, it makes a lot of sense because they're not necessarily afraid of going back to a 1980 scenarios with 10% inflation. They're not afraid of 500% inflation in 9 months or even more. And I think that really also goes back to what is the intrinsic value of something like Bitcoin. And whether it's Bitcoin or another cryptocurrency, I really think that the storage of value is just so valuable. And that's probably the highest utility that you can think of. I mean, often Bitcoin is compared to gold. It's typically called the digital gold. And if Bitcoin were to be priced at the same level as gold, it will be up around 500,000 US dollars for one coin. Now, I'm not saying that this is what it should be. You might have good arguments why it should be 10% of that or 5% of that or whatever it is. But a lot of the arguments that you have about something like cryptocurrencies is that you can't spend that in stores. I mean, you can't spend gold most places, but you can find multiple places where you can cash it in. And that's also what you see with cryptocurrencies. And if you think about gold, yes, there is some utility to gold, but it's actually very little if you really think about it. It really comes a lot from the trust that you can always find value in gold. So I think for me, if I were to invest in Bitcoin, I think like the storage of value is the most important thing.
It's quite a transition because we've never seen anything like this ever before. We've never seen anything that was a distributed network that was a store of value. That's never happened. This whole blockchain thing is brand new. I mean, it's never happened before. And I think that that's going to take a lot of time if this does go all the way and this really does become a global currency. That's going to take a lot of time to convince the general public that that's something that's safe and something that they actually want to possess. And I don't think that that's something that you can just sit down and have a casual conversation with anybody because you got to understand a lot of things. Number one, you got to understand game theory. I mean, this is all wrapped around game theory and the way that cryptocurrencies work. You got to understand monetary policy. You got to understand what's happening with these central banks and that they're in a race to devalue their currency so that they can manufacture growth inside their own country. You got to understand branding and marketing and how powerful that is to sway opinion and build trust. There's so many factors that are wrapped into this that's not going to happen quickly. It's going to take time if this does go all the way. And I think that that's really important for people to keep an open mind about it. And if you don't buy into it, heck, you might be smarter than us. But I think that it's important that you keep an open mind and that things could continue to move this way. And although it doesn't seem like there's any intrinsic value, I can tell you one thing. If there's $10 trillion of value pumped into this thing as far as the market cap goes, guess what? There's value there. You can take a Bitcoin at that price and you can go buy a Ferrari with that. And that Ferrari is real. Like, I don't care what anyone says, there's no intrinsic value. There'll be intrinsic value there if you have that many people on the network using this stuff. And that's important. That's really important for people to not rule it out because maybe they don't understand some of those nuances. And maybe they do understand those nuances and they just completely disagree with the fact that it's going to go in that direction. So, amazing question. And I think that it's something that a lot of people are thinking about.
I wanted to bring an argument to the table, really a counter argument. And whenever I say counter argument, it might sound like Preston and I are super bull on Bitcoin, and I don't know if we are. Like, if anything, we see ourselves more as media that a lot of people are talking about Bitcoin, so we're talking about Bitcoin, and we really want to try to understand it. If a lot of people are talking about bonds, we would talk a lot more about bonds. So I really just want to point out, I'm not saying to buy or sell or saying it's a good or bad idea. We really try to cover it from that angle. I would like to bring an argument to the table that Raoul Paul, who we had on several times on the podcast, he said, because he's not necessarily bear on Bitcoin per se, but he's definitely bear on the price. He's saying that the price would dramatically go down next year. And basically what he said was it reminded him of Cisco. So back in the days where the internet was all the rage and people were buying clicks and banners and all that for like outrageous valuations. What happened back then was that since Cisco provided a lot of the infrastructure to the internet, it was like if you're really bull on the internet and you didn't know if you should invest in Microsoft or some of the millions of other companies that were not Microsoft, the easy play was just to invest in Cisco because no one really knew what the internet was about. He argues there's a parallel with what's happening today with if you're bull on blockchain. I think most people will agree that there is so much potential in the technology of blockchain. Then you can more or less see Bitcoin as an application. Like Gmail. If Gmail were to go down, nothing would happen to the internet. And saying that, this is more or less a spin-off. It's something that is now available because of blockchain, but it's not necessarily something that would go up in price because blockchain would become more popular. I really like that argument. I think it's a very insightful argument, and it really made me think of everything that could go wrong, I guess.
Well, I got another one that I think could go wrong. So when you're talking about the most superior protocol to do store of value, when you're talking blockchain specifically, and you're talking about the way Bitcoin works, you got to have this mining mechanism in place. You've got to expend a lot of energy in order to secure that network. What happens if another protocol comes along that does that much more efficiently, that basically performs the same function, that you're able to transact a digital file or a digital unit of measure to another person that's not copyable, but you're able to do it at a much lower expense from a mining and energy and all that kind of. And that would be a whole nother discovery, like blockchain technology was a discovery. There's a thing out there called Internet of Things that's using a thing called a tangle, which takes no mining whatsoever. Now, I don't know that much about this, but that's a threat. That is an absolute threat to the protocol. That is a different protocol that could potentially be implemented, and it could take all the market share. And for people that maybe are so wrapped up in the Bitcoin specifically or any one of these other protocols like Ethereum or whatever, if you're so wrapped up and so headstrong that that's going to go all the way, I think you're potentially have a major gap in your understanding of how to assess risk to something. And so I think people need to really be on the lookout for other ideas. And I think that the whole network effect is definitely a very powerful force behind all of this. It's very hard to overcome a network effect as strong as Bitcoin, but that doesn't mean it can't be done. So I think people need to be very cognitive of all the things that could potentially go wrong, because that list is somewhat unknowable. And I think you got to be on your toes. So we're very big fans of this, but I think we're big fans because we're excited about the change in the finance sector in general and how this could all change. Like, to be honest with you, since the last recession, I've been thinking to myself, how in the world do these central banks get out of this? how does this all end? Do we keep printing into the negative territory and I'm giving the bank $100, I'm getting back 95 a year later? Like, how does this end? And to be honest with you, seeing some of this crypto stuff is getting me excited because maybe that's how this starts shaking out. I don't know, but it's a potential solution. It's something that could actually start making interest rates go back up if it starts getting mass adoption. And that's exciting. That kind of stuff's very exciting. And that's why we really like talking about it and learning more.
So going back to your question, so we previously talked about if we should compare Bitcoin to gold, say they have the same market cap, and with the available coins that's in the system right now, it would be around $500,000. Also try to make another comparison, and that would be to talk about the transaction fees. And it's not so that when you do transaction with Bitcoin, everything is completely free, but it's significantly cheaper. And if we think about what is the amount of the total transactions fees right now, it's around $300 billion every year. And I tried to take Visa's gross margin, and that's around 8%. I said that if you had a company with trading a PE of 20, and then this specific Bitcoin company, whatever you want to call it, would have 20% market share. And if we do that, we come up with a price per coin of around $60,000. Then I tried to look at what if the utility, the true utilities, was remittance. And you have around 600 billion a year, carried out by 200 million people, and put in again some criteria, and you might agree or disagree, and you can tweak it yourself. But say that the savings and transaction costs would be around 10%. So Western Union, they charge 9%, just like that. But say that the combined transaction cost would be 10%. Again, trading at a P around 20%, and say that Bitcoin could handle 20% of this market, then you have a price per coin around $15,000. I think that the problem that Bitcoin is really trying to solve, that is store of value. Now, again, that's not the same as saying that it's worth exactly the same as gold because it's trying to solve the same thing. But I do think that has more validity. If you think it's transaction costs and you think Bitcoin is better because it's safer, you're not a big believer in some of the other cryptocurrencies that might solve this problem slightly better. Or if you disagree and you think this is a question about remittance rather being the utility, then you might want to include that instead in your intrinsic value. We'll also like to take the opportunity to talk about a new tool that Preston created that's really evaluating the price action of Bitcoin. So please go ahead.
Trace Mayer is a guy that I really respect in this space. He's extremely smart. He's been playing in crypto since, specifically Bitcoin, since like 2011. He has a very large net worth because he's been playing in this stuff for so long, well in excess of $100 million. And so the way Trace, some of the stuff that I've read from Trace when he's looking at price and trying to understand if it's a good time to buy or simply hold, he was looking at a multiple, the price that it's currently trading at today or the price that it's at today compared to the 200-day moving average. And so he put out some numbers on some different blog posts that he did comparing the price to the 200-day moving average. And I found it quite interesting. So when he put the price out there, he only compared it a couple times in history. He had like maybe 8 different times where the multiple was a 10 and the multiple was a 3. And he's kind of showing those price points. And then he said, based on the 200-day moving average, this is where the price would be if the multiple was a 5, a 7, or whatever. Well, I looked at the data and I said, well, 5 or 8 data points or whatever clearly aren't enough to really kind of understand where this goes. So I wanted to chart it out and look at the statistics on it. So I did a statistical analysis of the price over the 200-day moving average for every single day since Bitcoin was originally started. And what I found was some really interesting results. And what I did is I bought the domain mayermultiple.com, and we named it after Trace because Trace's last name is Mayer. So it's mayermultiple.com, and I basically published all the statistical analysis that I did on this multiple. And it was really fascinating stuff. And something that I found that was really interesting is right now in December of 2017, the multiple is really high, way higher than it normally is. So this multiple is typically around a 1.4. So if the 200-day moving average is 1,000, then the price would be 1400 is what is the average for Bitcoin, is about a 1.4. Today, in fact, just a couple days ago, it hit a 5 or like a 4.5. So if the 200-day moving average was 1,000, the price was like 5,000. It was really high. And this is very uncharacteristic. In fact, this has only happened 2 other times in the history of Bitcoin. And every time this has happened, the price has come back down to about a 1.4 within like 15 or 30 days. It's really fast. So based on the stats that I'm looking at, the price has only been this high like 3% of the time it's been this high. And my expectation is that the price is going to come down significantly in the weeks ahead based on the statistics that we've done. But who knows? That's based on the past. And we got to look towards the future, and we have no idea what that future means. So based on historical results, we'd say that the price is very high and that it's expected to come down. But who knows? We might be in a different environment with the derivatives and everything else. We don't know that. But if you guys want to check out the statistics that I did on this, it's really interesting stuff. It's at mayermultiple.com. Check it out.
Yeah, and as people can tell, Preston and I, we're pretty excited about cryptocurrencies. So on mayermultiple.com, we're starting to compile all the various resources that we can find about Bitcoin that we might think is useful to you. At least it's been useful to us in our journey to really understand this. So we would really like to use this resource, not just for us, but really share it with the community. So together we can help understand this. So we just wanted to put that out there, that as we go along, there will be podcasts in there about cryptocurrencies, videos, and a few other resources.
Yeah, and if you guys are listening to this and you know of a good resource, send it to us on Twitter, send it to us on email, but get it to us so we can add it into the index so people can learn. Like, for example, there was a like 70 or 65 video lesson from Princeton University, completely free, that's listed on this resource that I've taken, and I loved it. It was amazing. I can't believe it was free. We want to add these things into the resources so we can all help each other try to understand what the heck is going on.
That's it. Preston and I will continue explaining investing, so go ahead and hit that subscribe button.